What's up, everyone? Today we're going to be going over a little tiny company called Power REIT. And speaking of power, do you think the surge protector should be doing this? Ah! Oh, wow. What a doozy. That'll wake you up better than coffee. So, Power REIT. It's a tiny little company, $53 million market cap, $28 a share. I think it's got huge potential to grow. It doesn't pay a dividend, even though it's a REIT, and I'll get to that in the end of the video. So let's go ahead and pull up the agenda. So first up is the rights offering. They're about to issue another 2 million shares. They currently have 1.9 million shares, and they're doing it in a non-dilutive way. You should read about it. It's kind of interesting what they're doing. So the total share count in this analysis that I'm going to use is 3.9 million shares. So let's talk about the three business segments that Power REIT is in. The first segment is they own land that they lease out to railroad companies, specifically Norfolk Southern. The second one is they own land that they lease out to solar farms. And the two combined, those two segments are not going to be growing, and they're considered obsolete operations, but they're current. The two combined earns about 35 cents of funds from operations per year. And funds from operations is a metric that most REITs use to calculate instead of net income. And here's the reconciliation between net income to funds from operations. So they also have preferred stock. You could buy it out in the marketplace. It yields about 7.3%, but it does cost the company 7 cents a share every year. And so putting the three together, the railroad, the solar farm, and the cost of the preferred shares, you're getting about 28 cents every year of funds from operations. All right, let's talk about the third segment, which is cannabis. And this is the big kahuna. So because cannabis is not federally legal yet, growers have difficult access to capital. And when they do, it's pretty expensive. So what Power REIT has been doing is they've been buying up the land, and then they'll build greenhouses on behalf of the growers. And then what they'll do is structure 20-year triple net leases where the operators have to pay all of the operating expenses, the insurance, the property taxes, and whatnot. And the first 3 years of the lease, Power REIT would collect enough rent to basically recover all of their invested capital. So they're returning about 33% yield on the first 3 years. And then from years 3 through 6, they'll return about 13%. And then after year 6, if cannabis becomes federally legal, the rent yield drops to 9%. And if it stays non-legalized, then it continues on basically where it was at 13%. And these rents escalate 3% every year. So the easiest way to really evaluate this is just think of it as straight line rent. You would add up all the rent payments and then just divide the lease by the term of 20 years. So what you have is a constant rent number every year for 20 years. And so comparing the two, if cannabis does not become legalized, it's earning 18% yield year over year, and that equates to about 71 cents of funds from operations every year. And if it does become legalized, then the rent yields 9% every year, and that equates to about 49 cents. Okay, so what are you getting when you pay 28 bucks a share? So let's consider the case where it's non-legalization. You still have the railroads and the solar farm and the cost of preferred dividend. So that's at 28 cents every year. And then you have the current leases on the cannabis operations, and that's 71 cents every year. And then what you have is $50 million of cash that they just raised. And that $50 million could be invested to yield 18% of rent yield every year. So that equates to about $9 million, or $2.28 every year. So when you combine them all, it's $3.27 of funds from operations every year. And if you're paying $28 a share, that's equivalent of 8.5 times forward earnings. To put it another way, buying at $28 a share yields about 11.7% every year. So what about the case when cannabis becomes federally legalized? Well, you still have 28 cents from the railroads and the solar farm. And then the current leases on the cannabis now becomes 49 cents a share every year. And with the $50 million of cash, it will now yield 9% instead of 18%. So that's $4.5 million. And that equates to about $1.14 every year, giving a total combined of $1.91 of funds from operations every year. So if you buy at 28, you're paying about 15 times forward earnings. And then putting it another way, if you buy at 28, it yields about 6.8%. But wait, hold on. If cannabis becomes legal, that means Power REIT would have access to capital also. And at that point, they would be sitting on $70 million of real estate that they own free and clear. So they could potentially leverage it up 50% and get access to $35 million of cash. And then with the $35 million, they could potentially buy another $70 million of property at 50% leverage. So here's how the math would work. With $70 million of new property yielding at 9%, that would be $6.3 million. And let's say that they're paying an interest rate of 6%, so the cost on the $35 million of debt would be $2.1 million, meaning they would earn an extra $4.2 million, equating to about $1.06 funds from operations every year. So combining that all together would be $2.97 every year of funds from operations. If you pay $28 a share, you're paying about 9.5 times forward earnings. Put in another way, your shares are yielding about 10.5% per year. There's another similar company out there called Innovative Industrial Properties, and they're very similar to Power REIT, much bigger though, 4 billion market cap, with much more established tenants. And they're trading about 30 times forward earnings, and their stock yields 2.6%. Now, I'm not saying that Power REIT deserves to trade at the same multiple as IIPR, but I guess what I'm saying is if you take $3 of earnings every year and you put a 15 multiple on it, well, that's $45 on the stock. And if we continue to be in this yield-starved environment and you put a 20x multiple on the $3 earnings, that's essentially a doubling of the stock at $60. So that's just some food for thought. Now, this stock definitely has some risks. It's very small, very tiny. So you're relying on the performance of management and making sure that there are no missteps. The CEO, David Lesser, he owns 26% of the company, and that's not bad, but he's also the CEO, the CFO, and the chairman of the board of trustees. So I would say that governance is a very small group. The stock also doesn't pay a dividend. It's supposed to because it's a REIT, but from their prior operations, they have a $17 million of net operating loss. And so because they don't have taxable income, they don't have to pay a dividend. I would say the single biggest risk is probably tenant risk. So one of their tenants is responsible for 22% of their revenues. And that's occupied by sweet dirt. But besides from that, you also have tenant credit risk. So I've looked through their leases, and or actually all of their leases have either personal or entity guarantees. But at the same time, there's not a lot of information on these tenants. Most of them don't even have a website. They're pretty small growers. And I could find medical licenses or retail licenses for all of them, but I think there are like 2 of them that I can't find licenses for. So I guess I would say there's not a super high level of comfort in terms of the tenants. And then there's tons of regulations, right? You have the MORE Act, the State Act, the SAFE Act, interstate commerce laws. I mean, that's just to name a few. And I think with the passing of every legislation, it either makes capital more accessible or it makes competition more fierce. And so the landscape is constantly changing, and you just have to be on the lookout for that. So that's my analysis on Power REIT. A tiny little growth company with some pretty good upside. Just be cautious on the risks. I probably wouldn't go all in. Let me know what you guys think. I hope you are staying safe, having good holidays, and don't forget to like and subscribe, and I'll see you next time. Thank you.